Welcome back to this free bookkeeping course where I'm teaching you the basics of double entry bookkeeping. I think I originally said there will be 4 videos in this series. It looks like there's going to be 5, so don't finish the course at the end of this video, but carry on with me. Congratulations, you get an extra video, so there's 5 instead of 4. In this video, I'm going to go through T accounts. So the letter T and the word accounts. Just to recap the previous video, I went through double entry bookkeeping, debits and credits, and on Excel I made a list of debit entries and corresponding credit entries. We had an amount for the debit, an amount for the credit, and the account that debit and credit were being posted to. That is fine, but it doesn't really help us as accountants and bookkeepers because it's very hard to see how much has been posted to sales, or how much has come out of the bank account, or how much has been spent on wages. If we simply have a long list of all these debits and credits, everything's been recorded, but apart from that, the data is pretty much useless. And that's why T accounts come into place. So T accounts, you have a big T, which creates a table, hence the word T accounts. There's a big T on the screen. The left side is for the debit entries and the credit side is for the credit entries. And you'll have a T account for every financial account. So you'll have a T account for the bank, you'll have a T account for sales, you'll have a T account for wages, you'll have a T account for rent, you'll have a T account for capital, and so forth. All assets, liabilities, sales, revenue, purchases, expenses will have their own T accounts. And what will happen is a debit will be posted to one T account and the corresponding credit will be posted to another T account. So the double entry remains the same, but instead of posting in a list like I did in the previous video, you post to T accounts. And the benefit of doing this is you'll have a total, a running total on the left and on the right, a debit total and a credit total, so you can easily see what has been posted to the account. And it makes it a lot easier to then create financial reports, which I'll cover in the next video. So let's bring up Microsoft Excel, my favorite software in the whole wide world. I have 4 T accounts here: a current bank account, wages, bank loan, and sales. So let's post some entries to these T accounts. So let's say, first of all, that a bank loan was taken out and paid into the bank account. So what we're doing when we are bookkeeping or accounting, we are simply recording what actually happened. So what actually happened is money came from a bank loan and was paid into a bank account. Now the bank loan is going to be a liability. So if we think back to our pearls, so PEA, purchases, expenses and assets for P, and then we have liabilities of revenue, liabilities and sales. So L is liability, credit, so credit and then debit up here. A bank loan is a credit because it's a liability. So let's put bank loan here and let's say it's for £10,000, euros, dollars, it doesn't really matter. So we need a corresponding debit for that transaction. It was paid into the bank account, so the money is going to show as a debit in the bank current account T account. So bank loan. So let's do another transaction. Let's say we made a sale. So debits are PEA, credits are RLS, S for sales. So we had a sale, which is a credit, let's say of 500, and the money was paid into the bank account. So we can do a debit here, sale, 500. Let's say we then paid someone's wages. Wages are an expense, E, expense, R, a debit. Let's say it was £1,500. We need a corresponding credit. The money came out of the bank account, so the posting will be credit, bank account. Let's then say that some of the bank loan was paid back. So money leaving the bank account is a credit, same as the wages was a credit. So we can do bank loan, 500. We need a corresponding debit. That will go to the bank loan account. Once all transactions have been posted to these T accounts, we can simply total each T account to get the total debits and credits. And I'll do this now. Okay, so the totals for each debit and credit side of each T account is now showing. You can see on wages, 1,500 is posted to debit, that's the total. Nothing is posted to credit, so it has a 0 total. With sales, we have 500 credit, so 500 total down the bottom, 0 total for debit. The bank account, we have amounts on both sides and the total showing down the bottom. And the current bank account, we have the debit total showing down here and the credit total showing down here. Now when there's a 0 total on one side, it's easy to calculate the balance of that account. Simply with wages, we have 1,500 debit and 0 credit. So the balance on this account is debit 1,500. On the sales, we have 0 on the debit side, 500 on the credit. So the total is simply 500 credit. With the bank loan, we have transactions on both sides. We have 500 debit and 10,000 credit. Now the way we total this account and find out the balance on the account is we deduct the smaller side from the larger side, and then whichever the larger side is on, that's where the total is posted. So we have 10,000 minus 500 gives us a closing balance of credit 9,500. If we have a loan statement for the loan account, then hopefully this would tally with that statement where £10,000 or dollar loan was taken out, a £500 or dollar payment has been made, and the loan balance is now 9,500. With the current account, we have 10,500 on the debit, 2,000 on the credit. So this is the smaller one, this is the larger one. Let's deduct the smaller from the larger and then post to the larger side. So 8,500 debit will be the balance on the current bank account. And once again, if we have a bank statement for this period, hopefully these transactions will show on the bank statement and the balance would be 8,500. Now this is a lot to take in. I understand that if you're brand new to bookkeeping, this may be very confusing. The great thing about this course, it's totally for free, so you can keep watching these videos. The more you watch it, the more it will sink in. But obviously, if you head over to my website, freebookkeepingaccounting.com, there's lots more content, and there's an older course, an older bookkeeping course that may also be helpful. So just keep plugging away at it and it will make more sense. The more you see these transactions, the more you see debits and credits, the more you will understand this double entry bookkeeping process. Now, when I first started in bookkeeping and accounting about 8 years ago, I did not understand this at all. It made no sense to me. I could not get my head around debits and credits. Now I'm the bookkeeping master. I know debits and credits like the back of my hand. I dream about debits and credits. A rubbish thing to confess, I know, but it's the truth. Just as I have learnt debits and credits, you can learn them too. I'll speak to you in the next video.